Today, we're going inside one of the startup stories that almost didn't happen, at least not for one of its biggest backers. Cerebras System, company that bet on building giant wafer-scale AI chips when everyone else was shrinking them, pulled off a blockbuster IPO offer generated billions for its investors and one firm in particular, Benchmark, which is now sitting on an investment that went from just a few $100 million on paper to a multi-billion dollar stake. This bet traces back to the moment when Benchmark partner Eric Vishria, initially a skeptic, sat down with Cerebras co-founder and CEO Andrew Feldman and came away convinced that this wild, too big to be practical chip might actually be the way to build the future of AI compute. What does it look like when it's too early and right in a market that everyone thinks is crazy? As you listen, keep this in mind. When one investor leans fundamentally into a weird idea, dinner table sized AI chips, and the rest of the world shrugs, what does it take for that conviction to turn into billions of dollars later? Cerebras System was founded on a contrarian idea. Instead of carving silicon wafers into dozens or hundreds of individual chips, what if we turned entire wafer into a single mass processor, specifically optimized for AI workloads? On paper, it sounds borderline impossible. Yields on a giant chip should be awful. Cooling and power delivery would be a nightmare. Existing software tools were not designed for something that big. When Andrew Feldman pitched this vision, lots of people in the industry, including certain investors, were very skeptical. But Eric Vishria agreed hold on, meet, listen, and dig in. Somewhere in that conversation, skepticism shifted to curiosity and then to conviction. On top of this, AI models are getting more and more complex. Traditional chips may hit limits that radically different design could overcome. Benchmark invested early and heavily for a venture firm of its size, reportedly putting $270 million into its Cerebras across multiple different rounds. At the time, it was a bold bet on a company that with no guarantee could make its hardware, let alone sell it. Fast forward to the IPO, Cerebras lists on public markets with an extremely strong demand. Its revenue has doubled and the company has turned profitable. Benchmark stake, once a few $100 million, is now worth multiple billions on paper. Is this just good luck? Payback for a weird idea. Which leads to our second question. When an out there hardware bet like this pays off this well, how much income was foresight and how much of it was just underlying investment that was surviving long enough through skeptics and cycles for the world to catch up? So, what exactly did Cerebras build that made this all possible? Traditional chips, AI chips, GPUs, and accelerator, powerful, but are still constrained by the physical size of the chip die. They need to stitch many chips together across boards and racks, and the overhead of moving data between those chips. Cerebras took an entirely different path. It designed a wafer scale engine, essentially one giant chip the size of the wafer itself. That chip contains hundreds of thousands of processing cores and an enormous amount of chip memory. AI models can be mapped directly into this huge contiguous compute surface, reducing the bottleneck of shuttling data between multiple smaller chip units. In practical terms, for some workloads, this means training and inference can be significantly accelerated. Model parallelism would be similar because you are not consistently crossing chip boundaries, and engineers can experiment with larger or more complex architectures that would be awkward on a traditional compute structure. It's not a magic bullet, simply a well planned attack. Plenty of AI workloads would still run beautifully on GPU farms, but This also offers different performance reward and performance per rack profiles for specific AI heavy racks. Clients like OpenAI and AWS didn't come knocking to Cerebras on curiosity. They came in because in benchmarks and real world tests, these systems help them do things far more, far faster, more efficiently, and with more flexibility than ever before. Client, the moment big customers said yes. The turning point for Cerebras wasn't just technical, it was commercial. Technical validation, landing customers like OpenAI and AWS signaled a few important things to the world. First of all, technical validation. Some of the most sophisticated AI teams in the world are dedicating workloads to Cerebras's hardware, which means the tech is not only working, but it's also adding real value. Ecosystem integration and partnering with major cloud providers also means that developers and enterprises across the world could access Cerebras systems through familiar platforms and procurement processes, not just via bespoke hardware purchases. And 3. Revenue and profit. These deals translated into strong top line growth. Reports suggest that Cerebras doubled its revenue and reached profitability ahead of the IPO, a rarity for deep tech hardware startups. That combination, frontier customers, real revenue, and black ink, changed the narrative from quirky chip startup to serious AI infrastructure player. For Benchmark and other investors, this is when the risk profile shifts dramatically. Instead of simply funding a science experiment, they're backing a company that has found product market fit at the high end of a booming market. In the age of AI, is the real power in the models or the machines that they run on? Which brings us to a big third question. As AI continues to reshape industries on the daily, will the most durable value sit with the people who build the brains or with the people who build the muscle, the specialized hardware that makes those brains possible? Benchmark is known for taking concentrated positions in a relatively small number of companies, being early in some of the most iconic names in tech, leaning into founders with strong product vision. Cerebras story hit several of those notes. It was big, focused on wager, and extremely simple, on single, highly technical thesis. Vishria and the firm had to be confident in evaluating not just software markets, but semiconductor physics, manufacturing realities, and capital intensity. They need a way for the long time horizon, years of research and development before the product itself is on the market. That way, when an investment like this works off, the payment is enormous. The initial stake of roughly 270 million itself post IPO is considered to be worth several billion dollars. That one position can return an entire fund or several investments on its own. It reinforces brand access. We're the kind of investors that believe in big, weird ideas, not just some incremental SaaS. But it also illustrates how narrow of a path this is. Many similarly ambitious hardware bets never reached profitability, let alone successful IPO. Cerebras was early, not too early, and Benchmark stayed long enough for that, timing paying off. That means for AI and hardware builders. So, what does Cerebras's success mean for the rest of the ecosystem? For AI labs and enterprises, it validates the idea of that specialized hardware as much or more than incremental model tweaks. It encourages more experimentation with alternative structures, not just more PCs and more GPUs, and it gives sophisticated customers more bargaining power and flexibility. We don't have to do it this way. For hardware funders, that's rare and powerful. But that you can build deep tech capital intensive chip company from scratch in the modern era and still get public markets. It also sets an incredibly high bar to follow. For investors and talent, you need a truly differentiated architecture, top tier customers, and the patience to survive in a long valley between prototypes and profit. For investors' talent, this may nudge more capital out of their hands and towards the picks and shovels of AI, the infrastructure layer, rather than just apps and models on top. And reminds everyone that in compute heavy fields, the company that controls critical bottlenecks like training hardware can command entire outsized value. And for the rest of us, chips that power the AI tools we touch daily, from chatbots, copilots, to system softwares and recommendation systems increasingly coming from more diverse set of hardware stories, not just one or two household names. And the pace at which those tools improve can hinge on breakthroughs in places we rarely see. In chip layouts, coding systems, interconnects, and compliance. So the next time you hear about a new AI model or a breakthrough in training speed, it might be worth asking what's underneath the achievement and who years ago was willing to bet on the unglamorous hard built hardware that made this possible. Thank you for listening to Business Insights Daily. I'm your host Shank and I'll see you next time.